Mark Yusko from Morgan Creek Capital. He is one of those guys that you just turn to when Bitcoin's in the news, when there's any sort of macro happenings. He can pretty much handle it all. And what's interesting is that I can kind of foresee in, say, a year, assuming it doesn't have to be Trump, but assuming there's a new president, that, we could be having this discussion and factoring in a Bitcoin reserve, a Bitcoin, I think he called it a stockpile or something like that, which would be a totally different discussion. And I'm wondering how that strikes Mark, the potential of that, if he's cynical like me and doesn't see much in it, or if he believes that it's a big hairy deal, which a lot of Bitcoiners seem to believe it is. But definitely Bitcoin seems to be mainstreaming, right, Mark? And thanks so much for coming back on. We really appreciate
absolutely. So Bitcoin has certainly been increasingly important in political circles over the last couple of years. I think punctuated by the Saturday pandering, shall we say? The Donald, for all his character flaws, is really good at pandering to certain special interest groups. So shall we say? So, he jumped on the opportunity to go to Nashville and address 8,000 dyed in the wool Bitcoiners. I snuck out of Dodge on Friday night. I did not want to deal with the lockdowns and the lines and the triple metal detectors, and so I came home. So I didn't watch it live, but I saw the clips, and he did the things you would expect him to do. He listened to Vivek, right, who was trying to make this case while he was running for president. Although it's funny, I think Vivek told him that 175 million people own Bitcoin, and I think all Donald heard was, "Hey, there's 175 million people who could vote for me. Okay, I want to go." That's globally, not just in the United States. But look, I think whether he wins or doesn't does matter a little bit for a few things in the short run. So, the Democrats have decided, I would say errantly, to lean more away from Bitcoin and toward CBDC. Although they're backing away a little bit from CBDC, but not that much. And look, that is pure evil. That is the height of, fascism and all that good stuff. But that's the direction that the current administration has been going for the last few years. So while I may not like Trump as a human being, I think he would certainly be better for us in terms of the directionality that his administration would take, particularly for business and particularly for Bitcoin. This idea of a strategic Bitcoin reserve, that was, again, pandering in the worst possible way. I mean, we're talking about a small number of Bitcoin that the government owns today. He wasn't actually talking about putting it on the Fed balance sheet. He was just basically said, we won't sell that which we have. Of course, the next day, the Democrats moved half of it into an exchange so that they potentially could sell. So, we'll see how that plays out. But, tone deaf, if you ask me. So, look, I think the one thing I heard from Trump in his talk that I really liked was, letting Ross out of jail. Guy creates a website that bad people use, and he goes to jail for 2 life sentences. I mean, that's just nonsense. So the fact that he said, yeah, I would immediately commute his sentence to time served, I think that's fantastic. And I hope the other side hears that too. And regardless of who wins, Ross should be out of jail. But, there are a couple other things he said that I thought were good and positive, but they were talking points. And I guess the good thing about speeches like that and the internet is people remember. So should he be elected and take over, they're going to say, hey, you said this, this, and this, you got to do it. And it's not unlike him to not honor promises. We've seen that throughout his career, but I think in a few cases he'd be stuck to having to maybe not aggressively be as negative against Bitcoin and crypto as, I know people don't like when you use those two words together. I know everyone in the audience cringed every time he said Bitcoin and crypto, because Bitcoin only.
Yeah, and he said it with such an accent, Bitcoin or something, right? It was like a funny way of announcing Bitcoin.
Well, and to that point, that's because I won't say that he doesn't know anything about it. I think he's spent almost no time, right? If Charlie Munger spent less than 10 minutes, God rest his soul, before he proclaimed that, trading Bitcoin was like trading newly harvested dead baby brains. Like, really, Charlie? Really? I mean, come on. And, if Charlie spent less than 10 minutes, maybe Donald spent 20 minutes, but he hadn't spent 10,000 hours. So I don't think he has a real understanding of it. And, but he does like to say it. And to your point, he does this with certain words. He creates the emphasis. I thought the highlight of the speech to me was when he said, on day one, I will fire Gary Gensler, and the crowd went crazy. And I think he was really caught off guard with how much.
Yeah, I was going to ask you about that, because
there was for Gary. So he said it again and waited for because he loves applause, right? Donald loves applause, like he loves self-aggrandizement, and so he really leaned into that. And so Gary's time. Well, assuming Trump wins, which I think is reasonably likely, although, anything can happen. Gary's time is limited, and that's really good for all of us. Although it does beg the one question, right? Which is the devil you know versus the devil you don't. Like, we know what's wrong with Gary and his, regulation by enforcement. And we've learned as a community and as an industry how to kind of manage around it. And there's one thing that I've been talking about lately that I think most people aren't paying attention to, which is, all the focus on the word security and is something a security or not a security. I think that misses the point, and it may have been a false flag. It may have been a red herring for the real issue, which is, it's not whether Bitcoin is a security or not a security that matters, or Ethereum is a security or not a security that matters. What matters is that they were classified commodities. Now, why does that matter? Well, it matters because you don't issue futures contracts against securities. I mean, you can have futures on securities, but where the real problem is in the commodities market: oil, wheat, gold, et cetera. When you have a commodity, like in the old days, if I wanted to sell Stefan oil, I actually had to have oil in my possession or under my control that on the day of delivery, I would deliver to Stefan. The problem is today, I don't have to own any oil. I can just write a contract saying, yeah, I'll sell you some oil, and I can create paper oil. Well, wait a minute. There's no oil there. So as long as we settle up the contract before the end of the period, then I don't have to go find any new oil. And so what happens is you get this perversion of price discovery in commodity markets. And we've seen it with gold spoofing for years. Gold prices are materially lower than they should be because of this spoofing that goes on, this basically scalping of the difference between the futures price and the spot price. And it's happening in Bitcoin. And I talked about this back in January, that nobody listened and they thought, it doesn't really matter. But On the same day that the Bitcoin ETFs were approved, the CME, run by this guy, Leo Melamed, who in 2017 famously said, we will tame Bitcoin. That's an interesting word, tame. And so the CME launched a number of new Bitcoin ETF products. I'm not sorry, ETF, futures products. And so what's happening is everyone points to all these big numbers, and Eric and the gang are out there saying, all this new inflow into Bitcoin in the ETFs. Nope. Most of it is not the retail money or the FA sponsored money going into Bitcoin. It's not, right? What it is it's big institutions, Millennium, Jump Trading, other trading firms, and people like BlackRock and BlackRock proxies, and that, people like sovereign wealth funds, et cetera, who are shorting the future and buying the ETF and scalping. And at the beginning, back in January, that scalp was about 30%. It's down to about 10% today. But that's a free 10% arbitrage. And if you use leverage, you can get significantly more. And yet it puts downward pressure on the actual price. So it was like, well, when the ETF gets approved, that's going to be great because people are going to buy spot Bitcoin. Well, yeah, but if more people are selling paper Bitcoin, then the price isn't going to move. And so, price is sitting here today at 66 grand, which is lower than 74, which is where everybody thought, we were going to the moon. And if you remember when the gold ETF was launched, it took 9 months to set this out. I mean, we were down about 20, 30% from the initial price post GLD launch, because if you remember the GLD launch, it got delayed by 2.5 years. Well, why? Well, because JP Morgan didn't allow it to be approved. Well, what do you mean JP Morgan? Well, they control everything. So they said, look, we need to get all of our shorts in line. And at one point they were short 2 times the world's gold. And then they allowed GLD to take the other side of those shorts on the ETF. And it took 9 months to work off that arbitrage scalping and get the arbitrage down to a level where the cost of funding was roughly equal. So it wasn't as profitable. And then, gold prices could move up again. But anyway, that's a long-winded way of saying, be careful what you ask for, because you might get it.
Yeah. I did like the Gensler aspect. Go ahead, Stefan.
Yeah, just what you're alluding to there, Mark. I mean, you're talking about the derivatization of, if that's a word, of Bitcoin itself, where I don't need the underlying anymore, and the trading volume is moving away from the hardcore asset itself into a script that is sort of a promissory note that is, confirming that I have Bitcoin in a custody somewhere, but all the trading volume is happening with that piece of paper.
Amen. And look, that long term, that's perfectly fine, right? As markets mature, they can absorb the innovation, the financial innovation or financial engineering around the edges. There are lots of futures and options contracts in the equity markets, and the equity markets mostly function. I mean, there's lots of manipulation. I mean, look what's happened in stocks like Nvidia and AMD today, right, where the shorts are getting pounded. But ultimately, in the near term, it's tough because there's not enough volume. And the thing that I find really funny is, everyone's like, well, when the ETFs get approved, BlackRock is going to have to buy all this Bitcoin. Yes, they are. And you know what you do when you're a very large organization and you want to buy something? You don't buy it, you sell it. And I love telling this story. So, Dwight Anderson worked for Julian Robertson, and Dwight went in and pitched, long copper. And Julian's like, okay, that's great. I want you to go sell 50 million copper. And Dwight's like, well, no, I said we want to buy it. He says, yeah. And I told you to go sell 50 million and tell everyone on the street that we hate copper. right? Because you want to push the price down to then go buy a whole bunch of it. It's what Soros did with the pound. I mean, if you want to buy a lot of something, you don't want to pay a high price. You want to pay a low price. So you manipulate the price downward in advance. And that's kind of what we're living through right now as BlackRock absorbs this massive amount of Bitcoin that they need for their ETF. And as they absorb the GBTC liquidation that's going on. And look, I'm not in the camp of Max and Stacy who think this is all evil and eventually they're going to confiscate it all. Because here's the problem with that plan. It's not necessarily a bad plan. And I could see the government trying to do it, saying, okay, BlackRock, you go accumulate all this Bitcoin and then we'll confiscate it. Well, other than the fact that those ETFs are not owned just by BlackRock, they're actually owned by pensioners and mom and pops and their 401k, et cetera. So that would be a problem if you just confiscated all their stuff, lawsuits. But more importantly, as long as there's one, it doesn't have to be one, it could just be one Satoshi. As long as there's one that isn't controlled by BlackRock, if you canceled all the others, the value would all accrete to what's left. So the network exists in perpetuity so long as there's one Satoshi held outside the evil empire.
You're listening to Truflation Spaces, FOMC rate decision day with the great Mark Yusko, who is continuing to put on a clinic in terms of Bitcoin basics and beyond. We really, really enjoy it. Go ahead, Stefan, you had some more?
Yeah, no, I'm going to jump in here because I really think that this is a really important topic that I think a lot of people are underestimating, and we're just so excited about seeing new liquidity be injected into the crypto market space. But actually, ultimately, what's going to happen going forward is not only, I think we're going to see a whole new suite of financial products evolve from the existing incumbent financial services industry, where they're all of a sudden going to say, oh, we'll accept an ETF as collateral and give you a loan against that. But the naked Bitcoin, no. We don't accept that. We don't want that. You have to actually go and buy an ETF from BlackRock in order to get a loan or use as collateral for a loan, right? And so all of a sudden, all the financial services are going to be built out on these derivatives that are going to be created. And then ultimately, the digital gold Bitcoin resides in some secret custodian that is going to be holding that as the digital gold or the reserve. And the new currencies going forward are going to be these scripts backed by Bitcoin type thing.
Actually, I want to interfere.
It's really important points, Stefan. And look, not to go down too far into the, although I would say it's not a conspiracy if it's true, right? So people say, oh, you're such a conspiracy theorist. All right, well, let's talk about this. So when I first got exposed to concept of Bitcoin back in 2013, I joke all the time. I was presented with the opportunity to invest in Bitcoin the same month as the Winklevoss twins, and they're multi-billionaires and I'm not. Why? Well, one, they had 500 million and I didn't. But more importantly, they were with Charlie in Ibiza, and they kind of got it. And I was here in the States with my traditional clients who, when I mentioned the word Bitcoin, they said, "You're an idiot. We'll fire you." So I got a little worried about that. But so it took me a while to really catch on. But as in that couple years of diligence, I Googled Satoshi Nakamoto. Right? I said, okay, who's Satoshi Nakamoto? And when you Google Satoshi Nakamoto, what comes up is Intelligence Central. Intelligence is what Satoshi means, and Nakamoto is the surname of the families from the central provinces in Japan. I went, Intelligence Central? That's like really close to CIA. So wait a minute. Whoa. What if the government realized that the dollar was screwed? Right? The debt was too big, couldn't be paid back, and they had to devalue, so the dollar is screwed. And so they create this interesting new asset, and people funnel this crappy currency into a good currency. So good money crowds out bad, like the reverse Gresham's law, which says that bad money crowds out good. which happens historically over time in crappy countries. But let's say we get to reverse Gresham's law, and then they just steal it all through a back door. I was like, oh, that's really not good. So it's fun. So Scott Stornetta, who, if you've read the white paper in the back, there are 8 footnotes, and 3 of them are Scott's work with his partner Stuart Haber. They coined the term blockchain way back when. And so Scott's an advisor to Morgan Creek. He's one of our venture partners. And so I was chatting with him one day. I said, so Scott, what do you think about this thesis? And he listened to, the thesis and immediately just said, nope. It's an interesting thought. Never really thought about it, but no. I'm like, well, timeout. What do you mean no? He says, well, your thought process is right, but your idea of a back door isn't possible with Bitcoin because of the air gap. I'm like, huh. But then he said, but with Ethereum, yeah, there could definitely be a backdoor. So, worry about that one. So I don't worry so much. Now, it's possible NSA or CIA created this. It's possible. In fact, if you go back, I always get this guy's name wrong, but it's like Takashi Sakamoto. I should get the name right. But in 2007, 2 years before Bitcoin was born, there was a paper sponsored by the NSA, written by Takashi Sakamoto, who is the head of cryptography at NTT in Japan. And it was basically talking about electronic cash. I'm like, oh, wait a second. That's like way too close to Satoshi Nakamoto. So, is it possible that they're at the root of all this? Yes. Is it possible that million coins in the Satoshi wallet is controlled not by, Hal Finney and others who people believe is Satoshi, but this entity? It's possible, but highly unlikely that they could steal it in the sense of a backdoor. And importantly, even if they had the million coins and they somehow canceled them, the rest would be more valuable. And Satoshi actually talked about this in his email traffic. Said, consider lost or stolen coins as a contribution, as a gift to the community. So I take comfort in that.
You're listening to Truflation Spaces FOMC Rate Decision Day edition. We're with Mark Yusko, and we're talking Bitcoin. We've gotten deep. You're down in the rabbit hole. If you wonder why everything around you is dark and now you're affixed with a tinfoil hat, you've entered the Truflation zone. It's a great discussion so far. And I know Yosef, he's a frequent guest on Spaces. He's with dvdt.com, .cc. Yosef, you were going to jump in. Do you have a question for Mark?
Actually, it was a comment for what Stefan said about how Bitcoin ETFs could be a collateral for like bringing more debt and creating derivatives. And I was like, isn't that the reason why Satoshi kind of published his white paper, was to prevent the big finance from controlling money? And now it feels like, I don't know, I'm really scared of this 1.1 million coins that he has in his wallet. Satoshi, if he's dead or alive, it's already nobody knows or who created it. But it's like, if the solution for freedom of finance called Bitcoin is going to go to the hands of the Wall Street, that's going to manipulate it and do crazy stuff with it, basically, right? Then doesn't it sort of like defeat the purpose of Bitcoin itself?
Well, yes and no. So I totally agree with your perspective, Yosef, that if, and that's capital I, capital F, if the big institutions were able to capture, all of the spot and financialize it on top through paper contracts, that would defeat the purpose. But ultimately, 70% of the coins today are owned by individuals, plebs, and those owners, some say, well, I'll never sell. Okay, fine. But at some point, you'll use the Bitcoins for commerce. And people say, oh, I don't want to buy a cup of coffee with Bitcoin. Well, I don't disagree today, right? But in the future, the idea of having L2s and L3s that sit on top of Bitcoin, kind of the same way that a credit card works, right? I in theory have money. Now, it's not my money anymore because I put it in a bank, but okay, let's just pretend it's my money. But I don't ever use money. I don't use the L1. I use my credit card, and my credit card settles up once a month. Okay, once a month, it settles down to ACH, which then settles down to FedWire. And it never settles down to L0, never settles to gold. So if Bitcoin becomes the L0, the digital gold, and we all hold those gold bars, but we do it in a way that's more divisible and more portable. Like if I had a gold bar here, I couldn't break it into a bunch of pieces and send everybody some through the computer. But if I have Bitcoin, I can send everybody a few Satoshis with a couple punch of the button. So that L0 is now a better form in the digital world rather than the analog world. And so, but I still don't necessarily want to use the core of my savings, my deflationary currency that replaces my fiat confiscatory currency. And as I over time, move an increasing portion of my own wealth out of the fiat world into the Bitcoin world as just a way of preserving wealth. Because the thing about Bitcoin that most people just don't really appreciate or understand, is one Bitcoin is one Bitcoin. It's like 1 ounce of gold is 1 ounce of gold, and an ounce of gold has bought a fine person suit for 5,000 years. And one Bitcoin is one Bitcoin, but we don't price Bitcoin in Bitcoin. We don't talk about Bitcoin in Satoshis. We talk about Bitcoin in dollars, right? If I ask people to price Bitcoin, they say, oh, $66,000. Or if they live in Japan, they say X yen. Or if they live in Europe, they say Y euro. But it's those assets that are inflationary and are devaluing before our eyes every day. I mean, it's part of the reason I got involved with Metaplanet. We're trying to become the MicroStrategy of Asia, and we basically took a public company and converted the business model to buying and holding Bitcoin the same way MicroStrategy does, and used the capital markets to arbitrage the ability to access capital markets through the debt markets, and then buy a deflationary currency with this inflationary asset. And the yen is way worse than the dollar. I mean, the yen is cooked because of the debt burden that Japan has. So we think the opportunity to set in Japan is actually even better than the United States. And MicroStrategy has been a pretty good investment to date. So it's all about this realization that, yes, the powers that be, the incumbents, don't want to be disrupted. And disruption is hard. I just got back from vacation, 20th anniversary of Morgan Creek celebration. We went on a 2-week trip to celebrate, and spent a bunch of time in Italy. And the thing about Italy is the history. And you go to a 17th century church built on a 5th century church that's built on a 1st century pagan temple to Mithras, and you realize that for thousands of years, the church had a monopoly on information, right? People didn't read, they were illiterate, they went to church once a week, they were told what to think, how to think. You listen to the whole Constantine story and how he changed they took the Mithras, it turns out Mithras was born on December 25th, and Mithras died and came back 3 days later. It's like, whoa, isn't that Jesus, not Mithras? But same thing. And so the church was able to give people their thoughts, and the printing press busted that monopoly. And so that monopoly shifted to governments. So governments, through media, controlled people's thoughts, either state-owned or state-sponsored. You know, when I was growing up at 6 o'clock, you watched Walter Cronkite or Dan Rather, and they told you what to think, how to think. And then the internet busted that monopoly wide open. And so now if I want to know what's happening in the world, I don't go to a newspaper or a television news channel. I listen to the internet. And so what blockchains do, and Bitcoin is the first application, is they free financial assets for the first time. Value is bidirectional. And that is liberating all of the capital that's been held in trust. So I toured the Pitti Palace, which is the Medici's summer house, one of those incredible collections of art that they stole from people over the years. And how did they do that? Well, they invented dual entry accounting. They stole it from the Portuguese monks, the Knights Templar, true story. And for 1,000 years, they dominated, or 870 years, they dominated through this series of banking cabals that were created. I'm not supposed to use that word anymore. People don't like it. But starting with the Dutch in 1607, and then with the Bank of England in the 1700s, and now with the Fed in 1913. And so the value was controlled by this banking system, and they skim 6 to 8% of global GDP from us in the form of a tax by ensuring trust. And again, in the old days, if I lent Joseph some money, I would write down in my papyrus tablet, because I'm old, that he owed me $100. And he comes back to pay me 110, and I'm an unscrupulous guy. I change my ledger, say he owes me 200, and there's only one ledger. He trusted me. That was a bad decision, so he owes me 200. So the Medicis came along and said, no, 2 ledgers. Joseph, keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, will make sure the ledgers match. And for a small fee, we'll live a nice life. And the problem is they were corruptible. So during the year, I go to the Medicis and I say, you know what? I'm going to change my number to 200 and I'll give you half. I'm like, done. So Joseph come back, pays me 110. I'm like, no, 200. And he says, hey, Medici, what? He said, you must have written their number down wrong. I'm sorry. So that trust works as long as people are not corruptible, but they are corruptible. So what Scott Stornetta and Stuart figured out is, well, in order for Joseph and I to have a good contract, we have to trust a third party. But then we have to have a fourth party oversee the third party. And then we need a fifth party to oversee the fourth party. That's a chain. That's a blockchain. That's what a decentralized system of truth is superior to a system of trust. And so today we have the ability to disrupt that trust industry, but the powers that be, the JP Morgans and the Rothschilds and et cetera, don't really like that. So they're going to fight really hard. But I think inevitably we win. It's my thesis.
Yeah, and that's hopefully the thesis that guides most digital assets going forward. You are listening to Truflation Spaces. We're getting into the back nine here with about 15 minutes or so to go. So we'd like your questions, your comments. If you're listening and you want to jump in and ask Mark something about Bitcoin, the Fed, TradFi, whatever you'd like, this is a chance to get pick a brain that's pretty noteworthy. Joseph, were you going to ask us something else?
Yes, I actually have a question for Mark, an additional one. First of all, Mark, anybody gives you trouble for using the word cabal, send them my way. I'll put them in a place. Don't worry about it. But
Love it.
Second of all, Mount Gox, right? FT Gox, all the coins that are coming up. What do you think the fate of those coins are going to be? Do you think that those are the people that got involved in Bitcoin back in the good old days and they're like long-term holders? They're like, listen, it's Bitcoin, it's do or die for us? Or do you think we're going to see some serious profit taking being placed? Because those guys made some life-changing money since then, right?
No, it's a really, really great question. I mean, and look, protecting you from yourself is a really interesting thing. What I mean by that is, so you bought some weed, and you had a few leftover Satoshis, and you put it in Mt. Gox and or I should say sold some weed, and so you got some Bitcoin. And long story short is you put it in Mt. Gox and then it gets hacked, and 11 years go by. And here's the thing. If you got that Bitcoin at $50 and it goes to 500, you're selling, right? Oh, it's a 10 bagger. Oh my gosh, I'm selling. No, I would have held. Most people wouldn't. So most people would have sold. But because you couldn't get to it and you thought it was gone forever, it's now up, thousands and thousands, tens of thousands of percent. And to your point, life-changing money, and what was a few $100 or a few $1,000 is now millions or even hundreds of millions. And will some of those coins get sold? Absolutely, no question. Now, will they get exchanged for fiat? This is the interesting thing that I think it's hard for people to really wrap their head around. So I said, back in January that the ETF was going to catalyze the conversion of more fiat into Bitcoin than the previous 15 years. So in 15 years, by estimates, about 200 billion of fiat was converted into Bitcoin that rose over time to over a $1.3 trillion in total value. And I thought that far more than 200 billion would come into Bitcoin now, post the adoption of the ETF. And so what happens in there is, in the early days, it was a very small amount of fiat that converted to Bitcoin, and there's this multiplier effect as the supply and demand at the margin. Because remember, it's not the whole set of Bitcoin that changes hands. It's just the price is set by two people exchanging a very small amount on the margin. And so as the total value of the asset increases, that incremental change, just the law of large numbers, gets smaller and smaller. So yes, a number of those coins will be sold, and if that would have happened 5 years ago or 10 years ago, it would have had a really big impact, I think, on price. But today, there's so much incremental demand that I don't think there'll be as big an impact on price. In fact, where I think the big price changes are happening today, you see these, wild 5, 10, 15% swings. I don't think that's the on the margin seller of a Mt. Gox coin or some other, found money. I still believe that's the futures. I think that's the big dogs intentionally pushing the price down so they can go buy those Mt. Gox coins. But that's just my thesis.
Excellent. That's going to be very interesting to see how that rolls out. And it's been years now. We do have some listener questions. Looks like Macro Pint is up here. Macro, do you have a question or comment for Mark? Go ahead, Macro Pint. You're up.
Hey, Mark. Yeah, a big fan from Asia. I just have two questions. One
I'm
technical.
not hearing anything.
Oh. Let me try again.
Still not Mark? I can hear you, Macro Pint.
Okay.
Can you hear me,
I
Mark?
can hear you, but I can't hear him. That's interesting.
That is interesting. Thanks, Elon.
Can I try again? Mark,
What's the question?
Sorry, you go ahead, Macro Pint. You ask, and I'll translate as it were.
Okay, so I have two questions. One is technical, and one is fundamental. On the technical side, we've all know that there will be a point of inflection, and we'll probably have that God candle that everybody talks about.
I can hear Stefan, but I can't hear Macro Pint.
Oh my God.
Macro Pint is in the middle of asking a technical question about a God candle, and then no, I'll try to.
Yeah.
I'll try to.
So
I'll try to relay here.
right. So the timing. What could be the potential timing of that candle? That's one. And the second question is more.
Potential timing
Yeah.
of a God candle. If you have any
Yeah,
thoughts on
look,
that, and
I know everybody wants the God candle, and Max Geyser talks about it all the time, and I think the problem we have is, again, just the law of large numbers. I mean, at $1.5 trillion market cap, it's just tougher to have the big giant candle unless literally some sovereign like Saudi or Aramco or Kuwait Investment Corp or something like that were to literally say, you know what, we're going to go buy $10 billion. Because the problem is the free float of Bitcoin is relatively small. You got the lost or stolen coins, you got the Satoshi wallet, you got the hodlers who say, pry it out of my cold dead hands. And so the amount that trade somewhere between 20 and 30% on any given week, that turnover, is pretty reasonable. And the day traders that are trading the same ones over and over and over, that's not moving the price very much. But if someone were to come in, and let's say there's $300 billion of free float ish. If someone said, I'm going to buy 10 billion, yeah, that would start to move. But even that, I don't think gives us the God candle that everybody wants. And I think the other problem or the other argument against the God candle is the future, right? The futures markets now are so robust, and there's so much big money that it's not that they believe that they can defeat Bitcoin. Right? I think the inevitability has hit everybody that blockchains are here to stay, Bitcoin is here to stay, that the traditional financial world is on its way out in terms of being rent seekers and toll takers. It's not going to happen overnight. It's not going to take 800 years, but it's not going to happen overnight. And so but I think there's enough capital that can tamp down the short-term price that the hoping for the big up move. I just think those days are gone. Maybe.
All right. Congratulations, Dave. You are the last question for this Spaces for Mr. Yusko from Morgan Creek Capital. Go ahead, Dave.
I appreciate you guys. Mark, what's going on, man? How you doing, my brother?
That's so weird. I can't hear him either.
No, come on. Hold on. Wait. Truflation. Truflation.
Oh my God.
No.
David say, no, come on,
Truflation,
man.
don't close the space. I'm going to drop down and come right back up.
No, I'm not. Dave's begging for me not to close the space. I'll relay the question to Mark. Oh, he begged off. That's hilarious.
Yeah, he wants to join back on, and hopefully his mic will work that time. I don't know what's
boom.
Super weird.
Go ahead, Dave.
Mark, tell me you hear me right now.
It's probably on my end, because when I first logged on to the space, I couldn't hear anybody else. I could see myself talking, that little bubbly thing. But
Mark, you hear me?
No, he doesn't.
God damn.
Okay. It's okay. Dave, just give me the question. And I'll relay it to Mark.
So I just wanted to say what's up to him also.
He said, Dave says, what's up? This is fantastic listening for everybody. Dave said, what's up, Mark? He's a big fan.
No, me and Mark.
Hey, I appreciate that, Dave. And I'm not worthy of fandom, but I do appreciate the kind words.
Yeah, definitely not a fan. Me and Mark actually worked together, or I tried to get Mark some work together to try and get him some money from the ENS crew. But my question is, ask him what he thinks about the $2 million move by the federal government of Bitcoin into the $2 billion that was recently moved into a new wallet.
Okay, I think you addressed this a little bit earlier, Mark, but he wants to know about the $2 billion the government recently moved into a new wallet, and he says that he's actually not a fan that you guys have worked together on something like ENS or something like that.
Yeah. So no, exactly. Thanks, Dave. So look, I think the current administration is tone deaf on so many things, and this is a perfect example. So you get Trump on Saturday saying that if he's elected or when he's elected, he will not sell any of the government Bitcoin, and he'll create this, strategic Bitcoin reserve, even though it's not really a reserve, but whatever. So he won't sell. So then literally the next day, they take half of what they seized and they move it to this other wallet, which says maybe they're thinking about selling it before he gets there. And look, the current administration's been money laundering through Ukraine ad infinitum for the last 4 years at a level that we've never seen before. I mean, if you looked up the definition of money laundering, you would see a picture of Ukraine and FTX and all the craziness that's happening. So it doesn't surprise me at all that they're trying to get a little last bit of corruption and funny money before they get kicked out of office. So that's not surprising to me at all. But again, in the old days, $2 billion would have really moved the needle. Today, it'll be a short-term hiccup, but I think it'll get absorbed and redistributed. And long-term, I still cling to my prediction that this cycle we add a zero. So we go from 10,000 last cycle to 100,000 fair value this cycle. We probably blow through that because of supply and demand and the irrational exuberance. Whether we get to 120, 130, 150, I don't really know, but my guess is that's where we peak out before the next winter period, which we'll have another winter, and then we'll have a spring and a fall and a summer, and the cycle will repeat. But long term, if it's your savings technology, hodl on and use the 10 to 15% to skim off every year to fund your lifestyle.
Boom. You've been listening to Truflation Spaces FOMC Rate Decision Day with the great Mark Yusko from Morgan Creek Capital, talking Bitcoin, black helicopters, Psyops, and all the rest. It's been a great fun Spaces. Mark, before I let you go, how do we follow you, find your work, and keep up with all things?
So I'm easy to find. I'm at Mark Yusko here on Twitter, which I'll never call X, by the way. And we have a website, morgancreekcap.com. YouTube channels, two of them, one called Around the World with Yusko, where we do some generic macro stuff. And then we have Digital Currents, both on Apple Podcasts, Spotify, and YouTube, where we do a weekly show on the ABCDs of the digital age, AI, blockchain, chips, and data, as well as some special guests, people like Mike Cagney and Pierre. I'm Pascal from Ledger, where we interview leaders, movers and shakers in the digital world. So easy to find. I do a lot of podcasts. You Google my name. It's a unique name. That was probably something like Juskovich or something way back when, but unique name. You can find me, and really appreciate the invite. Love what you guys are doing, and we'll talk again soon.